Hello again, everyone. I'm Joe Pryweller, Conference Director for Tire Business. I want to welcome you to this webinar presented by Snap Finance and organized by Tire Business. This webinar will address secondary financing and offer 5 little-known perks that are possible with this type of financing. The session will address how you can unlock a new customer segment, how to protect yourself from payment default, and how to boost sales in secondary business. Our speakers today from Snap Finance are Ryan Slobodian and Nate Jarvis. Ryan serves as Executive Vice President and has helped build Snap Finance from the ground up. He brings 23 years of sales management and operations experience to the table. Nate is Vice President of Marketing at Snap Finance and specializes in creating thoughtful strategy, implementing solutions, and driving results. A brief reminder before we start: to listen to this webinar, you can do so through your computer via your speakers or by dialing in at the number provided on your screen. You do not need to use a microphone for this webinar. During the course of the webinar, you can ask questions by opening the Q&A icon at the top or bottom of your computer screen and then typing in your question. Your question will be asked in the order received after the presentation portion of the webinar is completed. Let me now turn the presentation over to Ryan Slobodian and Nate Jarvis of Snap Finance. Nate, the floor is yours.
Thanks, Joe, and it's really our pleasure to be here, and a big thank you to Tire Business as well for making this possible. We've enjoyed working with you guys for years and appreciate this opportunity. And as Joe mentioned, I'm joined today with Ryan Slobodian, who is the Executive Vice President. As you can see from Ryan's picture, kind of looks like Jorge Ramos, the smooth and accomplished television personality. Ryan, it's good to be here with you.
Thanks, Nate. That's an inside joke between Nate and myself for the place we go to lunch. One of the ladies always suggests that I'm Jorge Ramos. But speaking of pictures, Nate, I know it's Nate's team that put together this presentation, and you look really great there. And me, it looks like they photoshopped that plastic smile into my face, so we need to follow up with your team after and thank them for at least making sure you look good.
Yeah, so that smile is 100% real, and just I think it illustrates a little bit of who Ryan Slobodian is. That there's full commit to everything he does, and including that smile. And so yeah, the ladies at the local soup and sandwich place where we go for lunch, they still to this day think that Ryan is Jorge Ramos. So I don't have the heart to break it to him yet, but. It's really our pleasure to be here. And now that you've met Ryan and I, what I'd like to do is just introduce Snap, the place that we work. Ryan, what can you tell us about Snap? You've been here since the beginning.
Yeah, thanks, Nate. So at Snap, we are a secondary lender really focused on consumers who have credit challenges in their lives. And we have this kind of holistic approach as we think about these consumers of trying to understand them, who they are, what challenges they face. And as we've built our company, we really wanted to make sure we're built on a set of values. And what you're looking at here on the screen, this is one of the walls inside our office. You can see the copier tucked in behind there. And this is our values wall. It talks about who we are and some of our values: play to win as a team, get stuff done, flexible, fast, and friendly, be a modern day shopkeeper, do it the right way. This is who we are as humans, and this is who we want to hire as team members within Snap. And we know if we hire the right team who are engaged, excited to be at work each and every day, and if they're treated well with trust, respect, and dignity, then they will export their happiness and their joy and their engagement to the consumers we interact with. You can imagine if you're somebody who's kind of maybe down on your luck and don't always get the best of anyone and anywhere you go, having a customer experience that's A+, which is what we strive to provide, is really our goal and objective. And that really starts with our team members at Snap and our strong values that we're built upon.
It's so true, Ryan. And I think we've all had that experience where we've had to either work with somebody in person or over the phone. And you can tell if they hate their job, if they hate where they work. And it's one of the things I've loved about Snap is just the investment into the culture and into the team. And it really is an amazing place to work, and is reflected by the experiences that customers have with us. And I'm super proud of our Google rating of 4.8 out of 5 stars. And there's just a number of other, really positive points along the way that just reinforce that when you invest in doing it the right way, that it shows. And it's really important as we partner with our merchants and with our other Will and Tire shops, that they know that they're gonna be treated the right way. And obviously, our position in the market is to serve the credit challenged customer. And when it comes to the credit challenged customer, we know that there's an opportunity there that we'll speak to today. And one of the things that I wanted to point out before we dive into that part of the presentation is just to speak to our product at Snap. And for a lot of secondary financing providers, they're offering what's called a lease finance agreement, or a lease to own purchase agreement. And what that is it's essentially financing that's based on a lease purchase, so that the customer gets the product and then pays over the course of 12 months or something similar to that. We do offer a loan product as well, but I just wanted to point out that for the sake of our conversation today, when we talk about financing, when we talk about what we offer, we'll be talking about our lease finance product today. And with that said, I think it's also important that we speak to who do we serve. And specifically, when we talk to the marketplace, we know that there's a need for solutions that go from the smallest local, corner shop to the largest, and we're proud to serve that full spectrum. And Ryan, I know you've had some experience in working with some of those larger clients. What's been your experience as you've engaged with them as well?
Yeah, this is one of the really exciting things that I find fulfilling about being at Snap is we serve the whole spectrum of merchant partners, as we call them. And basically, we've signed up over 25,000 retail partners to this point, and we have a field team that has great experience. They're based across the country. We have, there's the hunter and farmer models. They're in stores signing people up. And then we have this engagement team that goes back in after the fact and works with you, consults with you on not only your secondary financing process, but also on other things within your business as well. Hey, here's tips that they're finding from the local community that they're more than happy to share, because we're all about partnering with our partners, trying to make a strong value proposition, trying to help them to grow their business and be successful. I think, we've just heard so many stories and had so many discussions over the years with people where it's just like, wow, before we had secondary financing in our store, we were kind of just rudderless almost, or we weren't sure what we were doing. We were really struggling. This has just given us something to rally around as we found new customers to work with and new opportunity. We really appreciate, the people from Snap who come in and they treat us so well. And so it's just kind of been a fantastic experience, and we're just looking for more people who want to find new ways to boost revenues and serve a new segment of customers within their business.
For sure. And when you talk about that full spectrum of business, it reminds me of a story recently where, one of the top 25, partners that has signed up and with hundreds of store locations was wondering in the process of getting to know Snap, how are we going to get all of our stores up and running? How are we going to get everybody trained across all of these locations? Is that going to take, months, years to accomplish? And how delighted they were to find that our cloud-based training platform was able to get all of the stores trained and up and running and productive within hours and days instead of months or longer. And that's just underscores, the fact that, we've proudly been able to serve, merchants across that full spectrum. And with that introduction aside, we'd like to dive in now to our presentation today. And, the first little known perk of offering secondary financing in your store is that it opens your business to a new customer segment. And before we dive into this though, Ryan, we talk about secondary financing, we talk about primary financing. Maybe can you give us an overview of what those mean?
Yeah, great. Let's set the stage of kind of the financing landscape. Admittedly, before I got into this business, didn't pay a lot of attention to things necessarily. I'm sure listeners have a little more experience. They're trying to create onboard financing products into their businesses. So you have primary financing, which is usually backed by a bank that you've heard of, Wells Fargo, Citi, those sorts of things. And this is really what I assume many of our listeners are used to is they, you need to have a good credit score to interact with them. It's a big bank, et cetera. But there's a whole nother level of financing that sits below or beside primary financing. That's secondary financing. That's financing providers who are focused on people who have credit challenges in their life. So they have lower credit scores or whatever it may be. And the interesting thing is it's about 40% of the entire US population have credit scores that do not qualify them for primary financing. And this is who Snap and some of their rivals in the space are also focused on, is serving these credit challenged customers who have a need to transact within your store, don't have a credit score that will qualify them for traditional financing, but definitely have needs and are squarely focused on the payment. They're looking for an affordable payment and understandable financing product that works for them. And so it's interesting as we've gone through this journey with you, if you will, of understanding the credit challenged consumer. We talk to a lot of folks and they always say, well, we don't have people with credit challenges within our store. And we say, how do you know? And they say, well, nobody's ever asked for that, or our approval rate is high on our prime financing product. But the experience of the credit challenged consumer is that they know that they've been denied previously, and no one likes that denial experience. No one likes to be told no. So the odds are they're not asking for a credit product within your store because they assume they will get denied, or they're coming in and paying with cash, or they may not even be coming into your store at all because they know there isn't a product in there for them, or if you do have a product, you may not be doing an effective enough job of messaging it, saying, hey, we have an opportunity for credit challenged customers to transact in our store. We talk about this constantly where people are like, well, we tend to buy with our own wallet, I guess is what I'm trying to say. We tend to look at things through our own experiences. So unless you've been in a credit challenge situation yourself, it's hard to understand what that consumer is necessarily looking for. So there's an education process that needs to go on within your establishment with your team members so they know how to talk and interact with these particular consumers. And that is some of the stuff we're going to talk about today.
What I love, Ryan, is just think about the opportunity that represents, knowing that over 40% of the population in the US doesn't qualify for that primary financing option. And when you think about that and you start to wonder what opportunities, might be there for your business, I think you pointed out the fact that it's important to understand that this is a customer that's used to being told no. They've likely had other experiences where their credit's been affected, and now because of that, they're in a position where all of a sudden they're kind of experiencing that embarrassment. And the goal would be to not have that associated with your business, and that you take the fear of being denied and it actually becomes an opportunity with offering secondary financing. And you hinted at this as well, but one of the biggest questions for every store owner out there and wheel and tire shop is, do I actually have these customers in my store? And that's a really tough question, because when you start to try to look for and see if you have that customer in your store, it raises the question of, is it even possible to tell, what does a credit challenged customer look like? And the reality is, the credit challenged customer looks like all of us.
Yeah, I think that's a really good point, Nate. I remember years ago, I was in a shop talking to the owner and getting a little pushback, right? And finally, he clued in, and I remember exactly what he said. He said, you know what? I do see a lot of bulb tires on Mercedes, and said, yep, exactly, that's it. We don't know. Someone may have, a high income, but they may spend more than they make even, so they may be in that credit challenge bucket, even though they're driving a nice car with bulb tires. And in another instance, there was a larger partner based in the Midwest with multiple locations, and we were talking to them. Same discussion. We don't have those people in our store for a variety of reasons. They'd come to believe that, which is valid and understandable. So after a little more discussion and understanding and teaching and back and forth, we said, well, why don't we just do a test? Why don't we see, let's take a few stores and see what happens. And sure enough, After the first few weeks, we got a very enthusiastic phone call back saying, you wouldn't believe what's happening. We've put up, signage, we're messaging, we've taught our team members how to offer secondary financing to those walking in the door, and we're starting to see traction. We're starting to see approvals and additional sales, and now that partner does over $500,000 each and every month in secondary financing transactions. It's obviously a wonderful story. We've got a great, strong partnership. We've been appreciated of, we've learned a lot from them, and they've learned a lot from us, and at the end of the day, it's been a win-win-win for us, their customers, and ultimately for them as well.
Yeah, and I love that story, because that's just, it's so indicative of what so many others have experienced as well. Even those that have told us that they don't believe that customer is in their store, that they don't have a lot of them. I think every shop owner out there is aware of a customer that might say they're just browsing, or that they're doing research, or that they're looking to make a purchase down the road. And a lot of those things can sometimes be an indicator that this is a customer that might be interested in financing. And one other thing that I think is super relevant to the conversation today and what's going on right now in the world is that, the COVID-19 has the real potential right now to increase the demand for secondary financing. And that's because this pool of shoppers that are going to need secondary financing is actually increasing due to two really noticeable factors. The first one being that all of the primary lenders that are out there with so many unknowns in the new COVID reality, they're just not sure exactly who to approve and who not to. So it's customary to pull back on those approval rates, which leaves more people getting denied that will need a secondary financing. And then also, obviously, there's an economic ripple effect from this. And we've all seen the unemployment rate. We've all known people that are affected by just kind of the economic fallout that's occurred recently, and that all ripples into people's credit profiles as well, and will affect their ability to get approved or not. All of these just really underscoring the fact that by offering that secondary financing in your store, that you're able to, as this perk points out, you're able to introduce a brand new segment of customers into your store. And that leads us to our second little known perk of offering secondary financing. And that is that by offering this type of financing, that you remove risk in your store. And Ryan, we've talked a lot about this and some of the things that merchant partners will try to do to help serve customers and trying to do things, and it kind of takes them away from their core business a little bit. What can you tell us about your experience there?
Yeah, thanks, Nate. I'm sitting here. I always try to strike a empathetic approach, trying to understand where other people are coming from. And one thing, as we're putting together this podcast here, I'm thinking, where are people listening to this right now? Typically for me, my approach during the pandemic is I've started listening to podcasts while I do my yard work and stuff. I have a teenage son who typically helps me, but I have so little to do. I've taken all the yard work back on myself just to kill the time and the boredom. Plus I bought a fancy new electric mower that I really enjoy. Anyway, so I think for us, you always have to think about your customers, right? In every approach, empathy, who are they? Where are they coming from? What are they doing? And likewise, we're thinking about our retail partners and some of the challenges they face in their business and how do we design a solution for them. So focus on your customers and what matters most. And I ask you, our listeners, why did you go into business? Did you go into business because you wanted to help people? You wanted the challenge of building your own business. You're passionate about tires and automotive repair and rims and wheels or whatever it may be. My guess is you probably didn't go into business to be a finance provider. But unfortunately, there's these situations that arise from day to day or week to week within your business where someone comes in, they're in a tight spot, they need an upgrade to their vehicle for whatever reason. They may apply for credit, or they may not have the means they need to get things done, and they're pushing for a deal from you or whatever it may be. And because you're a good-hearted person, what do? You decide to keep that balance on your books and allow them to make payments over time. And but the challenge is you didn't go into this business. So we want to provide you help for these customers without the headache. So we take on, the financing where you're able to help them with the needs they have for their vehicle. So it's really, kind of one of the benefits of Snap as we're talking about these perks is we take away that non-payment risk from you. Snap takes that on ourselves and allow you to focus on serving your customers and the things that you're most passionate about.
And Ryan, you're what I've seen is things like layaway programs or trying to do, like a 6 months same as cash payment schedule and things like that will people, they'll try to put this in place. But what that does is now you have kind of a high maintenance part of your business that's not even core to what you specialize in and really probably where you want to put your time and put your staff and your energy. And what I love about Snap is that, and really secondary financing, is that we take over and we assume that risk. And the way that happens is it's a pretty simple process. And the first thing is obviously when we partner or when you partner with a secondary financing provider, that they provide that financing option so that when a customer does get approved and you complete that transaction, the business gets paid within 2 business days or less. And at that point, just like a cash transaction, you're finished and complete and can move on and continue to serve customers and engage. And from that point forward, everything from customer service to follow up and outreach and payments, questions, all of the above, we take that on from there, and the customer just makes those affordable payments over time. And that process, when you do add it into your business, not only does that remove the risk and kind of lighten the load on that end for you as the business owner, but it kind of leads us to our third benefit, and that is that, by adding this secondary financing, that it also has a really strong impact by increasing your average invoice amount. And Ryan, when we say invoice amount, a lot of people use different terminology there. What do we mean by that?
Well, when we talk about invoice amount, it's just the transaction cost really at the end of the day. So you're taking, your average invoice amount, and, a lot of times you have people who are, you look at the shopping behavior of your customers and when they walk in their door. I think from my days in customer service, I became an expert at body language, right? You're always taught to, kind of read how people are approaching, what are they doing, what their stance is, a variety of things like that to understand what their behavior may be. And, you can see here on the screen, you're taking someone who says, I'm just looking, to someone who says, take it, right? And you're changing people from browsers into buyers, which is really what this is all about. So when someone's a browser, they may not have the finances, they're reluctant, they're not enthusiastic. And providing somebody with the funding through, a secondary finance approval, all of a sudden they become an enthusiastic purchaser. There's more options available to them, better quality, versus the people who are looking at, kind of the smaller risks or the smaller purchases they're just trying to get by. I think one of the things, an anecdotal story from Snap, and one of the things is you'll relate to, I think, is as business builders yourselves. I've done just about every job in the business, frankly. And back in the early days of Snap, I actually used to work on the phones quite often and have people call in. And an interesting thing happened. This one guy called in and he said, hey, I just want to tell you thank you really quick. And I said, well, that's really nice of you. I appreciate that. I think in our businesses, a lot of times people only call to complain and they don't call to compliment. So when we get a compliment, we're really excited. So I said, hey, why don't you tell me your story? And he said, well, I was driving with my family from Colorado to Texas for a funeral. As we know, funerals never happen at convenient times, and his family was just trying to get there. And a tire blew out on their car. And they were able to get to a tire store that happened to have Snap, but he didn't have any cash or anything in his pocket. And he said, hey, I've just got a little bit of money here. I need a used tire. I need to get to this funeral in Texas. And the tire shop said, we'd love to help you, but you'll notice that your other tires are in pretty bad shape as well. You're probably not going to make it far down the road. You may have another blowout or a serious situation. Your family's in some danger. And he said, I don't know what I'm going to do. And they said, hey, we have this secondary finance provider, Snap Finance, that has a lease purchase option. Why don't you check that out? They approve a lot of people. So he applied, he got approved. He got 4 new tires instead of the used tire. You can imagine that shop, they're delighted. Speaking of average ticket value, they take a very small transaction and turn it into something substantial. But beyond that, they also created a friend and a future customer. So he and his family get to the funeral and back safely. And he calls in, he's like, hey, I just want to say thank you. Thank you for trusting me when nobody else would. Thank you for giving me a chance. I really appreciate that. Obviously, that's a wonderful story, but I think back into my own life and I'm like, how often have I called my credit card company to say thank you? Never is the answer. Delighted with that experience for that customer, helping him out in a time of conflict and peril in his own life. And that's what we're about at Snap each and every day, is trying to, overcome those challenges that people face in their own lives and providing solutions for customers and for our retail partners as well.
And Ryan, you're right. And the reality is people they shop your store differently when they have financing in place. And what I mean by that is, somebody who walks through the door of your average shop and is, looking to buy, they kind of have a filter in place that's based off of what they think they have in terms of purchasing power. And this entire perk that we're talking about right now is how secondary financing can increase that average invoice amount. And it reminds me of a Forbes study that showed that 63% of Americans don't have the cash savings to cover a $500 expense. And so you think about the opportunity that exists just from that fact alone, that you're going to have people walking through the door and they have a filter in place of what they think they can buy. But to your earlier point, sometimes that causes them to compromise in terms of safety, in terms of, they might choose a generic option instead of, the safer option when it comes to tires. And that's what financing can provide. I love the story that you've shared as well, that's illustrated on the screen here today, about how this impacts, a business and their average purchase amount as well.
Yeah, as you can tell, Nate, I'm a big storyteller, right? I love when people tell stories and I learn from those stories, and I love to share stories as well. This is a different partner of ours in Arizona. And this is metrics that they have, obviously rounded off numbers here a little bit, but their average invoice amount without financing is about $800. A pretty nice sale at the end of the day. But you can see when you allow someone to get approved prior to the transaction, it increases their buying power, as we've talked about. And for them, they have a 37% increase in the average ticket amount up to $1,100, because it takes that customer from getting the needs to maybe some of their wants, or taking care of some of that more not immediate need maintenance on their vehicle, whatever that may be. So obviously, I love that when they share that with me. Customers love the experience as well, because everybody wants to know they're riding on a vehicle that's in good shape, right? And this allows them to take care of some of those niggling maintenance needs that maybe they just don't necessarily would take care of if they're just paying out of pocket. Again, creating a better customer experience.
Absolutely. And Ryan, one thing that I learned early in my career, and I think that's illustrated by this slide as well, is that when you see customers invoice amount go up, it's actually an act of joy. It's a representation of them getting into what they really wanted instead of settling. And so this is a perfect illustration of that win-win that you talked about earlier, because built into this, average invoice amount going up is the fact that obviously a merchant partner, you could imagine as a store owner how the impact of that would be as it translates across your business. For every customer, if you're able to help them, get into what they want and those invoice amounts go up, that's going to be hugely beneficial. And I know, many stories of partners who have started introducing secondary financing like Snap, and they're in the same location, they're on the same street corner, they're doing a lot of the same things, but by doing that, they've actually been able to increase the overall growth of their business, because they're now able to drive up those invoice amounts as well. And as I said, it's such a gift to that customer as well, to be able to get those things done and have the safety in place and get into what they really want, and instead of just settling. And in above and beyond increasing the average invoice amount, secondary financing translates into ultimately boosting your sales in other ways as well. And the specific points in this perk that we wanted to talk about is there's a statistic that 7 out of 10 customers will either settle for a smaller purchase or walk away completely after a credit rejection. So that's kind of a negative statistic. But what I like to do is kind of flip that and look at the positive upside of that, that if you do offer a financing solution that says yes, that takes the primary financing turndowns and turns those into a yes, that instead of having those customers walk away, that you actually you have these customers who are now having an experience in your store where they're being told yes. And as you can imagine, when we talk about boosting sales, imagine what that does to their belief about your store and to their future shopping patterns as well. Because what we've got now is a customer that's not only going to come back to you, but that is also going to begin to tell their friends, and there's a ripple effect from that. And so one of the biggest benefits of secondary financing is not only the transactions that are able to take place, but the ability to get the word out to the market that you offer this option. And Ryan, I know you piloted the in-store point of purchase program and have seen this firsthand as well.
Yeah, Nate, I'm a big fan of the practice of micro habits, which is about making small changes in your life that lead up to large changes over time. And I think likewise with SNAP and financing in general, there's simple changes that can have a large impact on your business over time. And I think one of the key takeaways in all of this is you need to make sure that you're messaging internally and externally about your portfolio of financing products that you have. So that you're capturing 100% of the consumer market, not just 60% as we talked about earlier in the presentation. So you want to make sure you're speaking the language of people who have credit challenges. You're saying, hey, we have an option for people that may not previously been approved for a primary financing product. So we, work with our field team to train the store associates internally so they are obviously offering SNAP at that time. And also we encourage people to change their external messaging, whether it's just outside their shop with a simple banner or balloons or something or other type of signage, or whether you push that further out into your social media campaigns, onto your website or other traditional media you may be using like print and television and radio. When you do that, you then create an expectation for customers that there is something that works for them. You get rid of that painful experience that they've had in the past with the denial that we've talked about. They know that isn't going to happen to them there. So all of a sudden you take out that ambiguity in the experience for them and they walk in this very different experience. They come in as buyers instead of browsers. They start looking at merchandise and start talking about things that they need done on their vehicle. Again, boosting ticket sales and boosting average ticket amount and boosting sales ultimately for your business.
And you're right, Ryan. It's the fact that you've got to share the good news. Now that you've got a secondary financing provider that's giving you good approval rates, and you're able to approve a lot of customers that were walking out before. It's so important to just let people know, and that can be done in simple ways, just integrating it into your current messaging strategy, your current marketing strategy. Making sure that you've got that represented for the people who walk through your door, through your store signage, your social media, your advertising, and ultimately it will start to spread word of mouth. And that's one of the great things about it, is that you'll start to become known as a place that says yes. And it's a big potential to continue to lift your business and create that flywheel effect over time. Something that I think is really worth discussing in our current state of uncertainty is there a way that secondary financing can help to continue to boost sales even during COVID-19? And once again, this is such an important thing for us to discuss and for us to talk about, simply because, who knows what the new reality looks like, but the COVID-19 ripple effect through our economy has definitely affected tire shops. And in a recent survey that we did, internal survey of our SNAP merchant partners, we saw that some were doing really well during COVID, while others were having more of a negative impact. And so what we wanted to find out was, what were the key takeaways, and how were those merchants who were doing well, what was it that they were doing, and how can we share that to help as well? And two of the big takeaways that came from that that we'll share right here. These were consistently in the top as far as impacts that they were having. And I just want to say really quickly before we dive into this, that originally when we put these slides together, I tried to throw in the word thriving, because I think that's what it really is. It's not just surviving, but it's how do you thrive as well? So that's a I think I might patent that, but thriving COVID-19. The first one that I think is incredibly important is making shopping safe.
Yeah, Nate, I think that's a key point. I think through my experiences over the past several months as we've been working our way through this pandemic and this unprecedented upheaval, I just, think about my own experiences, again, trying to be empathetic. And I have some family members with some, they're probably more at risk due to health circumstances. So I try to seek out businesses and establishments where I feel a little more comfortable. And so in that, I think what I've learned is that the businesses that do a good job of making shopping safe are ones I'm more likely to visit. And speaking from my own experience only, of course, but where they're doing messaging in advance. They may be sending an email, or they may have signage outside their store, or they may have something posted on their website. So you're aware of what to expect in advance in your experience, taking some of the ambiguity out of it. There may be hand sanitizer available. There may or may not be masks required. The waiting room may or may not be open. And additionally, some other stuff I've seen, in my own experiences, hey, we're going to wipe down your car internally after with disinfecting wipes so that it's been sanitized. There's a variety of different things that people are doing. But I think at the end, no matter what your personal decision is on how you're going to serve your customers, I think messaging up front and letting people know what to expect in the process is very important. The other component in this, number 2, is to offer financing early in the process. This is one of the other big learnings we have, is that allows people to know, again, setting expectations of kind of what their buying zone is. When we look back to the example I told earlier with the guy going to the funeral, he only had $20 for a used tire or whatever that was. And he knew that was his, target buying zone. So if you offer financing early in the process, you allow someone to get approved. They know what their approval amount is. It opens up the spectrum of where they decide to purchase and what options they may include in that transaction.
And Ryan, when it comes to offering financing early, they didn't even specify from the survey that we did that it was secondary financing. It was really just the fact that people are kind of hanging on to their cash more, and savings rates are going up, and that means that financing just obviously from their perspective was more important than ever. And getting that in place early, to your point, just affects kind of the filter through which the customers shop the store. Going back to the last point, I think another good thing to underscore on just making shopping safe is that, SNAP offers and some secondary financing providers offer some really important things that help for customers to continue to engage with your business and to do it in a contactless way. For example, customers can get approved on snapfinance.com and then go into your store and transact. Or we also have a text to apply service where you can send them an application, or they can text and receive an application directly on their phone. They can get approved before they ever even step foot through the door. So if you as a business are offering things like delivery or curbside pickup or other things like that, there's absolutely nothing that would need to disrupt your business, because customers are still able to get the financing that they need. They're still able to place that transaction with you remotely, and then you can go ahead and facilitate for the transaction to be finalized. And that's, I think, from the partners that were doing well, what they found was, that there's an important mental approach to doing this, of not just trying to wait it out, because the reality is that this could be a lasting impact for an unknown period of time. It's important to take steps to continue to help the business to flow, and that leads us on to what is my favorite of the 5 perks, and that is that having secondary financing in your store encourages repeat business. And before we dive into this, I'd even expound beyond that secondary financing encourages just incremental business of all types. And as we dive into this, the first thing that I think is important to consider is what is the customer's lifetime value, and how does repeat business affect that? But Ryan, what do we mean by lifetime value?
So lifetime value is basically a way of measuring the profitability of a customer, if you will. You take into account that customer and the number of times they come into your store over a certain series of time. Because we know the most expensive time to get, or the most expensive cost on that customer is the first time they come through your door. They've, seen your advertising, your messaging, or whatever it may be. And so that cost of that customer is X. But over time, as they visit your store over and over again, the cost for that customer to come in is lower and lower, which means in each transaction, your margin is better on the business side of things. I think all of us agree that we're not looking to a one and done transaction. That isn't a profitable way to build a business, that you're trying to create relationships over time. And this is, the proposition of secondary financing is creating relationships with a whole new segment of customers. And so there's a variety of ways in doing this, but ultimately you can see your business increase by up to 30% by making sure you're doing a good job of providing products for your customers that allow them to stick with you through their lifetime. We know that most people shop within about 5 to 10 miles of their home. We know that they live in those homes for about 5 to 7 years on average. So that lifetime of that customer for you is probably 5 to 7 years. And so as you engage with them over and over again, hopefully they have multiple cars and they come and see you not just for tires, but for oil changes and other services. And over time, the lifetime value of that customer increases as you provide offerings that work for them. And this is, kind of the basic fundamental I hear in a lot of business books. It's like reselling to the same customers over and over again, expanding within the footprint of your existing customers by providing more options for them is a great way to find, to boost your overall revenue.
I love it, Ryan. And the when I think about lifetime value, I love the idea of every single customer that comes in, looking beyond just the transaction of today, and just imagining how many more times will they need the service that I offer over the course of their life, and what am I doing today with the way that I treat and interact and serve them that helps them to want to come back. So obviously there's going to be a certain percentage of repeat business that will just flow into any store naturally by the experience that customer has at that store, whether or not they want to come back and shop in that location again. And what I wanted to talk about today, and specific to secondary financing, and this could end up being a little bit of a shameless plug for some of the things we've built at Snap. So I just want to put that out there as a disclaimer, because I'm not sure all of the things that all of the other secondary providers offer. But one of the things that we've built at Snap is a very world-class and high-level marketing program that actually engages with the customer and sends direct mail programs and campaigns, and email programs and campaigns, pre-approval offers and campaigns, and even text messaging campaigns to drive and to stimulate repeat business flowing back into your store. So the benefits go beyond just the fact that you've been able to give them a positive experience that day. It's the fact that when they need that next thing down the road, they're actually going to have an offer in their email, and they're going to know with your name attached to it that they can come back in and that they can transact again. And that's where we see a lot of merchant partners that far surpass that 30% increase in repeat business. And you have to sit there and think about it. I've been a small business owner before, and who wouldn't want to see that level of increase flowing into their business with really no additional marketing costs, no changes to the location, and everything else stays the same in your business, and yet all of a sudden you could see this growth. And that transitions me to something that, as I said, I don't know what all of the others do, but I thought it'd be important to talk about some of the marketing and growth programs that come as part of secondary financing. Specifically at Snap, we've created what's called the Snap Edge. And Snap Edge is a marketing program that's included for free with your partnership. And its primary function is to drive that increased level of repeat business. And we know you're going to have a certain volume of repeat business that will flow in anyway, but our goal is to help you to grow that even further and to drive even more success. But above and beyond that, one of the things that we do on snapfinance.com is we're looking to drive actual net new customers and new business into your store. And it's something we're very proud of at Snap. So we're engaging in high level marketing campaigns and outreach campaigns, including SEO and paid search, and other, targeted outreach through direct mail and other ways to find that new business, to the degree that we're sending hundreds of millions of dollars of new business to our partners. And think about the impact, as you sign up with a provider and you're hoping that you're going to be able to get more business by just closing more customers in your store. And then, some of the feedback that we've had from partners and just the delight when they realize that they've got, a steady flow of customers walking through the door with pre-approvals in hand, with financing in hand, and that they have that buying power to shop in their store today. And then, of course, the final bullet point that I have here is that it increases the buying power. And this is through the programs that we have that make eligible customers able to take out concurrent leases so that they can actually buy more than once in your store before the first lease is even paid off. And Ryan, I know that was for you personally something that you built even before I got to Snap. Tell me a little bit about how that happened.
Yeah, sure, Nate. Well, it's true that time really flies when you're having fun. I can't believe we are 45 minutes in already. We'll try to wrap this up pretty quick here so we can get to some questions. But yeah, I think, it's been one of the keys overall is we know that if we can help our retail partners increase their revenue by putting customers in their store already approved with, financing, it's a great proposition, right? We talk about partnering with our partners, and this is one of the key ways we do it, right? We want to create a relationship where everybody's winning, and snapfinance.com is just a huge tool in that proposition. I think so. As you're evaluating, as you're looking out there, if you're looking for additional customers, secondary financing and the Snap Edge is really a way to make that happen for you. And what this has really led to is to an experience where our partners love us. They love our approval rates. They love our stability in uncertain times, especially right now, through, kind of the ups and downs and the economic turmoil. Snap has been there. We've continued to fund. We have a great banking relationship, and we have the capacity to help not only our existing partners and new partners. We've seen a big influx of additional retailers reaching out to us in the past 3 months saying, hey, we've run into some bumps with our existing partner. We know it's difficult right now. We'd love to get going with Snap. And we say, sure, we'd love to help you. We definitely have the time, the experience, and the capacity to help you out. Obviously, they love the Snap Edge program that we've talked about, and they love the true partnership principle we talk about. We are in our retail partner stores. We're helping, we're retraining, we're sending them new customers. We're helping to boost their ticket value. And we're really trying to create a value proposition that people rally around. So now it's up to you. So we present, the secondary financing challenge, or the Snap challenge, as we like to call it. Snap is easy to onboard in your store. It takes no time and there's no cost. We provide the materials and the training and everything for free. And all you need to do, like we talked about, is make some minor changes to see some significant increase within your business. So we challenge each and every one of you to take on the Snap challenge here. Set a time, set a date, give us a call, and reach out to us. Nate, how about you go through the 5 perks again real quick, then we'll put up our contact information on the screen, and then we'll hit the questions.
That sounds great. And really it's the secondary financing challenge. And obviously Ryan and I are passionate about Snap, but we really invite you to just go out and learn as much as you can about the space, and reach out to us with any questions that you might have. But ultimately there's real benefit there if you're able to open your business to this new customer segment. They will go elsewhere if you don't have that type of option. We'll happily remove that risk, and that's one thing that secondary financing does, as we talked about, increasing that average invoice amount. Everybody would love that in their stores. That's the win-win for customers and for merchants. And then just by including it into your outreach programs and how you communicate and how you're known in your marketplace, that's really going to boost your sales. And then my favorite, it encourages incremental and repeat business. And with that said, we are Snap Finance. I'm Nate Jarvis and Ryan Slobodian, and we'd love to take any questions that have come in at this time.
Great, thanks Ryan and Nate for offering some great tips on using secondary financing and insight how it can benefit your company. As Nate just said, we're now open for questions. Again, you can type your question into the Q&A box at the top or bottom of your computer screen, and we'll answer those in the order received. Nate and Ryan, you guys talked a little bit about the pandemic and experiences with COVID that you've seen. Has Snap experienced any lending interruptions due to the pandemic?
Yeah, Nate, I'll go ahead and take that one. No, we have not experienced any lending interruptions during the pandemic. As you can imagine, when things changed so rapidly back in March, I remember it was, I believe, a Wednesday night. I was flying home from Florida back to Salt Lake City. I was on the plane. I don't think the Wi-Fi or the TVs were working for whatever reason. And I landed and opened up my phone, and the world had changed so dramatically. One of the Utah Jazz basketball players had tested positive. I think Tom Hanks also had tested positive. There were several things that happened during the 4 hours I was in the air, and it seemed like things had gone crazy. We rapidly moved to disperse our workforce and allow them to work from home, which obviously help them feel safe and protected in a very unknown time. And then the next thing was to look at is how, what's going to happen to our retail partners? What does our funding relationship look like with our banks? And quickly got on the phone, and we've developed very strong relationships with our partner banks over the years. These are money-centered banks, so they're very stable, and no funding interruption at all from Snap. And like I referenced earlier, not only have we not had funding interruptions, we've actually had an influx of new business as others in the space may have struggled with the source of their funding, where we've been able to power through and continue to help our retail partners through a difficult time, continue to transact and serve the credit challenged customers.
That's great. So you were prepared for it and taking advantage of opportunities in this difficult time we're in anyway.
Exactly.
We were really fortunate that way. Yes.
Yeah, that's excellent. Have you found that customers are more cautious in this time period about buying, and they want to put things off, or do they want to be afraid of purchasing? Is this where secondary finance can help with some of that too?
That's a great question, and I'll jump in on this one, Ryan. What we saw initially, for about a month, there was kind of a little trepidation across the I would say the whole economy, and in a way, it almost seemed like it was kind of a pent up release, where after about 4 weeks of people hesitating on making purchases, that we went into a period of time where people were out and they were transacting and buying again. And that's one of the things about Snap, is that we're foundationally kind of a needs-based partner to help our merchant partners and customers with those unexpected needs that come along. And those don't go away during a pandemic. I mean, there are still those needs. A lot of people rely on their vehicles for work, and whether that's an Uber driver or a contractor or just somebody that needs to commute back and forth, having a vehicle that's up and running isn't something that can wait. And so to your point, it's actually become more important than ever. And any kind of initial trepidation on the part of the market was quickly surpassed by just a surge of demand.
That's great. How long does a customer have to complete their payments with this system?
So the Snap system is built around a 12-month lease to own purchase option. So they, we strive to make it as easy as possible. So we take payments from the customers on their paydays, realizing that that's something that works for them. So it's a 12-month lease to own term for the customer. There are a couple options where they can terminate early for lower costs for the lease as well. And that's explained clearly during the transaction. We do a couple things to make sure that everybody knows exactly what the terms are up front prior to signing their application and moving forward with the process.
And that's one thing about that 12-month lease purchase is, it reminds me of when I was establishing my credit about 1 million years ago. And one of the first things I bought was a car stereo, which is, just what you buy when you're young. And so I bought this car stereo, and they allowed me to make a minimum payment on that for probably like 7 years. And I have no idea how much I paid in total on that. But one of the things that Snap has set up is to be a clear path to ownership. So it's a 12-month path to ownership. You make those payments over 12 months, and at the end of that time, you own the item outright. And it's been wildly popular. They love that option.
Great. Customers feel good about that they can do that in a 12-month period and then own it. Is there any paperwork during the transaction? This is a question that came in from our audience. Is there any paperwork during the transaction, and how fast are the approvals for this?
Yeah, so during the process, it's actually a completely paperless transaction. So everything is conducted digitally, either on the consumer's own device or the retailer's computer in the store. So there is the application process. It takes about 5 minutes to complete the application. I'm just looking for some basic information, such as income, banking information, basic identity information. Just we want to make sure the customers are who they say they are, and they have the ability to repay, obviously. And then on the back end, there's just a simple e-signature that takes place. So there's no hard paperwork. Agreements are sent to the consumer's email address that they've used during the application process. As far as how fast the approvals are seconds. So once the application has been completed by the consumer, you hit submit. And typically when I'm in the office, there's a monitor I can see, and it's somewhere in the 2, 3, 4 second range. It's just instantaneous almost. So there's no additional calling back and forth with the finance provider. There's no additional searching for paperwork for the customer. In the past, people may have needed to do some type of income verification or document verification. That is all in the past, as we use kind of advanced machine learning to find the data we need in the background and get those approvals. And as we know, at the point of sale, speed is everything. There's only one computer in the shop typically, and it's always the point of everybody needs it at once. So we know if we can either conduct the transaction on the customer's device or make it fast on the store's computer, everyone wins in that scenario.
And
That's super.
One of the cool things about Snap is that it's been built from the ground up as a fintech company. So the technology is where it started. It wasn't a pre-existing thing that tried to awkwardly add technology. It's actually been built and developed as a platform from the ground up. And that's really what allows it to be paperless and seamless. There is no, going to your bank and printing bank statements. There's none of the process of having to give, whatever, other points of verification and validation. It literally, as Ryan pointed out, it's been optimized so that the application takes just a few minutes, and then almost instant on the decisioning for them to have that decision and approval in hand.
Great. Can be done contactless too, as you said, which is pretty easy, it sounds like.
Awesome.
You mentioned that shopping is a key consideration for a shop right now is making shopping a safe experience. How does Snap and the secondary financing model fit into some of that?
That's a good question as well. And as we mentioned earlier, and just to summarize, Snap, because it's technology based, it can work in person. So if you're in a store, they can help and facilitate and walk you through the application process. But you can go directly to snapfinance.com and a customer can apply and get approved just as instantly as if they were in a store. You also have that opportunity through our text to apply, and through any one of our merchant websites, you can also go and get approved. And I think it's worth just pointing out what Ryan said, that at Snap, doing it the right way is one of our beliefs. And so from the very beginning, we took this pandemic seriously with encouraging and establishing a work from home for our employees as well. And then we've even built out a little web series around how to keep your shop safe and how to make safety a priority for all of our partners, so they can go and learn tips on ways to build out a safer shopping environment.
Great. How much does it cost to sign up a shop for this?
So the great thing about Snap is there is no cost to sign up whatsoever. We handle
no cost.
No cost whatsoever. There's not too much in life that's free, right? So we'll handle the training. We'll probably bring some treats like some licorice or whatever for your team to keep them on their feet and keep them engaged. And then also we provide the signage. We provide free, website integration links so you can have the Snap application on your website. The technology and the platform and everything is free. There is, depending on the store, there may be transaction costs similar to a credit card charge, but those tend to be nominal when you look at the additional sales that you're getting.
Great.
There's no recurring recurring cost. There's no like annual fee or no startup fee or anything like that. As Ryan pointed out, it's no new equipment needed. It integrates easily into the computers and the systems that you have in place.
Great. Are most customers approved for this program? Obviously people right now, some of them losing their jobs or furloughed or something like that. How easy is this for a customer to get approved for this type of thing? And what's required there?
I'll jump in on that one, Ryan. The good news about Snap, kind of starting as a technology for a company is, Ryan pointed out that we use machine learning algorithms to approve customers. And every single shop has their own unique algorithm that learns over time. And so really your approval rates are based specifically and not watered down by anything else that's happening around you. It's really specific to what happens in your store. But we'll typically see really good, and what we see as industry leading approval rates. Because that varies from one store to the next, it's probably inaccurate for me to state one percentage or another. But a very high percentage of people end up getting approved. And I think it's important to understand these are people who were denied primary financing and are now in a secondary position. So to be able to approve a high percentage is really, I think it's the primary consideration for most shops when they consider who to partner with.
Great. Well, with that, unfortunately, we're out of time here, and appreciate all your help and really opening up some eyes on how secondary financing can really help a shop and, as you said, bring repeat customers and increase invoice value and everything else you talked about. I want to thank everybody for attending this Tire Business webinar presented by Snap Finance. We appreciate the great questions, and I want to especially thank Ryan Slobodian and Nate Jarvis for a great presentation and for answering all your questions so thoroughly. Also, if you have further questions or want to reach out to Snap directly, the contact information is on your screen. So feel free to reach out to Nate and Ryan, and the folks at Snap will be glad to help with anything else. Finally, you'll find today's presentation by going to the webinar section of Tire Business's website. The presentation will be posted within 24 hours of today's webinar. I want to thank everybody for attending, and we'll see you at a future webinar.
Thanks, Joe.
Thanks, Joe. Take care. Be safe.